When Glauber Contasoto decided to invest his life savings in Dogecoin last February, his friends were concerned. They all looked at me like I was crazy, he said. It's a prank coin, it's a viral video, it's going to go down. Their skepticism was justified. After all, Dogecoin is a prank, a digital currency launched in 2013 by a pair of programmers who wanted to mock the cryptocurrency craze by creating their own virtual currency based on a meme about Doge, a talking Shiba Inu puppy. Investing in obscure cryptocurrencies has historically been akin to throwing money on a bonfire. Thanks for watching Crypto Lion. If you haven't already, consider hitting that subscribe button and don't forget to turn on post notifications. We'll be right back after this.
GSX is an unprecedented financial asset that combines the best elements of a traditional investment with the backing of a stablecoin and the use cases of many of the largest decentralized currencies like XRP.
Mr. Contasoto, who worked for a hip-hop media company in Los Angeles, is not your typical buy-and-hold investor. He's one of many thrill-seeking amateurs who have jumped into the markets in recent months using stock trading apps like Robinhood to chase outsized gains on risky speculative bets. Mr. Contasoto decided to go all in on Dogecoin in February after reading a Reddit thread about its potential. He maxed out his credit cards, borrowed money through Robinhood's margin trading feature, and spent everything he had on digital currency, totaling approximately $250,000 in investment. Then he obsessively watched his phone as Dogecoin became an internet phenomenon with a value that surpassed that of blue-chip companies like Twitter and General Motors. Mr. Contasoto, who dropped out of college, has no formal financial training, appears on the surface to be no different than a lucky gambler who walks into a casino, bets all his chips on a single roulette spin, and walks out a millionaire. He is, however, representative of a new breed of hyper-online investor who's succeeding by applying the skills of digital attention economy, sharing memes, cultivating buzz, and creating endless streams of content for social media to the financial markets. These investors, who are mostly young men, do not act rationally in the economic sense. They choose investments based on looser criteria, such as how funny they are, how futuristic they appear, or how many celebrities tweet about them, rather than their underlying fundamentals or Wall Street analyst estimates. Their philosophy is that in today's media-saturated world, attention is the most valuable commodity of all, and that anything that attracts a lot of it must be valuable. Memes are the millennials' language, Mr. Contasoto said. Now we'll have a meme paired with a currency. Mr. Contasoto, an affable, bearded hip-hop fan known as Jason Prolific, is a first-generation immigrant whose parents immigrated to the United States from Brazil when he was 6 years old. When he was a child in suburban Maryland, he saw his family struggle with money and vowed to become wealthy. As a teenager, he developed an interest in hip-hop music, and after graduation, he relocated to Los Angeles, where he took a job as an entry-level video editor, earning $36,000 per year while attempting to book gigs for an up-and-coming rapper that he knew. His ambition was to save enough money to buy a house where he and his hip-hop friends could live while creating music. But that kind of money was elusive, and he spent several years sleeping on couches while saving for a down payment. In 2019, he began purchasing stocks through Robinhood, a commission-free trading app. He focused on large, well-known companies such as Tesla and Uber, and when those trades profited, he bought more. And in January 2021, he watched in awe as a group of Reddit traders successfully boost GameStop's stock price, squeezing hedge funds that had bet against the video game retailer and pocketing millions in the process. He did attempt to participate in the GameStop trade, but he was too late and lost the majority of his stake. Mr. Contasoto was browsing Reddit shortly after the GameStop saga when he came across a post about Dogecoin. He was familiar with the currency. Elon Musk, who's roughly equivalent to Pope Francis among Dogecoin supporters, referred to it as the people's crypto. But as he did more research, he became convinced that Dogecoin's lighthearted, approachable image could propel it to the status of the next GameStop. He claims that Dogecoin has the best branding of any cryptocurrency. If you put all the symbols of Ethereum, Bitcoin, and Litecoin in front of me, everything just looks super high-tech and futuristic. And Dogecoin simply appears to say, "Hey guys, what's up?" He imagines that first-time cryptocurrency investors will gravitate towards something fun and recognizable, and that Dogecoin will eventually become a kind of on-ramp to the larger world of virtual money. I believe that eventually we'll all be buying and selling things with memes, and Dogecoin will lead the way, he said. As strange as his investment thesis may appear, the results are difficult to dispute. Even after a recent drop as a result of Mr. Musk's appearance on Saturday Night Live, during which he joked about Dogecoin being a hustle, Dogecoin remains a very profitable trade. $1 invested in Dogecoin on January 1st would be worth around $200 today, far more than a comparable investment in Bitcoin, Ethereum, or any S&P 500 stock. Dogecoin's meteoric rise has also sparked a lot of skepticism among cryptocurrency enthusiasts. who see it as a gimmick that overshadows more serious uses of cryptocurrency. One of Dogecoin's original creators has renounced the coin, and even Elon Musk has warned investors to not overinvest in the cryptocurrency. So what explains Dogecoin's longevity? There's no doubt that Dogecoin mania, like GameStop mania before it, stems from a combination of pandemic-era boredom and the eternal appeal of get-rich-quick schemes. However, there may be additional structural forces at work. Soaring housing costs, record student loan debt, and historically low interest rates have made it more difficult for some young people to imagine achieving financial stability by gradually working their way up the career ladder and saving money paycheck by paycheck as their parents did. Instead of ladders, these people are looking for trampolines, risky, volatile investments that could result in a life-changing windfall or send them back to square one. Mr. Contesoto is a prime example. He now earns $60,000 per year, which is a decent living but far from enough to afford a home in Los Angeles, where the median home costs nearly $1 million. He drives a beat-up Toyota and has spent years living on the cheap. But in his 30s, and still without a home, he went looking for something that could change his fortunes overnight and ended up at Dogecoin's door. Mr. Contesoto sees evidence of a system that is rigged against regular people when he recalls how he used to pursue wealth, working hard, cutting back on expenses, and saving some money from every paycheck. I feel like those experts on TV, the older generation of old money and wealth, try to scare people into staying safe so no one gets too rich, he explained. Scared money doesn't make money, he says, as his new motto. Many aspects of Mr. Contesoto's investing philosophy would make a traditional financial advisor cringe. The most bizarre aspect is that despite his spectacular gains, he's yet to cash out his Dogecoin millions. He believes that the currency's value will rise further, and he doesn't want to miss out on future profits by selling too soon. However, he intends to sell 10% of his stake next year once his earnings are classified as long-term capital gains and taxed at a lower rate. Instead, he's establishing himself as a Dogecoin expert, adopting nicknames such as the Doge Father and Slum Doge Millionaire, and promoting Dogecoin through YouTube videos. I'm bullish in the Dogecoin community, he said. If this has exceeded my expectations for Dogecoin, and I've only been at it for 2 months, imagine where it'll be in 2 years. Of course, as with any volatile investment, Mr. Contesoto's Dogecoin holdings could lose most or all of their value, putting his dream of home ownership out of reach once more. Dogecoin's price has already dropped nearly 70% from its all-time high, wiping out hundreds of thousands of dollars from Mr. Contesoto's portfolio. However, gamblers rarely leave the table after their first loss, and Mr. Contesoto's commitment to HODLing, an acronym by cryptocurrency traders that stands for Hold On for Dear Life, is helping him weather the recent market turmoil. He posted a screenshot of his cryptocurrency trading app back in May, indicating that he'd purchased more. And when the value of his Dogecoin holdings had dropped to $1.5 million, roughly half of what it had been at the peak, he posted another screenshot of his account on Reddit. "If I can HODL, you can HODL," said the caption. There's still a lot of news hype surrounding Dogecoin, which is driving up its price. Elon Musk has also gotten in on the action. He began tweeting about Dogecoin at the end of last year and has yet to stop. And as long as he continues to do so, people will continue to buy it. However, while following social media hype can be a smart short-term trading strategy, it does not guarantee that Doge will be a successful coin in the long run. Thank you for watching today's video. If you enjoyed it, make sure you subscribe if you haven't already, and turn on bell notifications. We also have a free Discord group where we share daily signals, and now you can also support us on Patreon. We have a special offer for our first 100 members, only $9.99 for our VIP Discord channels, where we share much more in-depth analysis and even one-on-one sessions. And make sure you check out the GSX competition for your chance to win big. Links are below, and if you have any questions, drop us a comment. And as always, good luck and happy investing.
Hollywood Carson. That's how it goes. Hollywood Carson.